Hi, everybody. Mathis Connor here with Connor Management Group, and this week we have another stock pick for you and another category. This week we have a small cap stock to buy that we think is pretty interesting, and we're going to step through this presentation real quick and hope you find it interesting too. As you can see, it's in the diversified electronics industry, and we see the 12-month upside potential at 150%. You definitely don't come across these opportunities every day, that's for sure. And let's step through it. The name is Nam Tai Electronics, ticker symbol NTE, and they're a diversified electronics manufacturer. They're what's called an OEM, original electronics manufacturer. I'm sorry, original equipment manufacturer, and they make products for other manufacturers. Here's the formal description. Namtai Electronics provides electronics manufacturing and design services to the original equipment manufacturers of telecommunication and consumer electronic products. The company manufactures electronic components and sub-assemblies, including color, monochrome, liquid crystal display modules for PDA phones, smartphones, mobile phones, telephone systems, and handheld consumer electronic devices, among other things. So you can imagine that there's definitely some demand there. And you look at all the tablets and the growth of smartphones and the like. Their website is namtai.com, NAMTAI.com. The company is headquartered in Shenzhen, China. On the map, it's let's see, it's southeast China, just outside of Hong Kong is where their headquarters is located. They were founded in 1975, and they've got just over 6,800 employees. Their ticker symbol on the New York Stock Exchange is NTE, and they're in the sector of technology. The industry is diversified electronics, as mentioned. The annual revenue, the last 12 months, has been $1.2 billion. The net income is $75 million. The cash from operation for the last 12 months is running at $100 million. And the market cap is, only $357 million. Just definitely putting it in the small cap category. So here's a look at some of their products and their facilities. They also make Bluetooth headphones as well. They operate in a clean room type environment, and you can see how that's obviously pretty important when making these thin film displays. So some of their other metrics, as we mentioned, the cash flow from operations is running at $100 million. It's nice and healthy. The trailing PE ratio is at 10.6. Little middle of the road. I mean, they are a manufacturer, so you wouldn't expect anything too high. The forward PE ratio, there's just nothing available. There were very few analysts who are looking at that, and consequently, oftentimes you won't find projected earnings. But oftentimes, usually when analysts aren't looking at something, that also reveals possibly a great investment opportunity. So their price to sales ratios, very low, 0.3. Their price to book is at 1.0. You don't see that too often these days. And their enterprise value to EBITDA number is also low at 1.3. The recent closing price of the company is $7.88. Their 52-week high. They've been as high as $16.37 in the last 52 weeks, and we can talk about that later. They're off from that high, and their low has been as low as $5.55. Their average trading volume is at 633,000 shares per day. Definitely a healthy traded company. Their beta is at 0.87, so they're not as volatile as the market. And their dividend yield is pretty healthy right now, very healthy at 7.4%. The average dividend payout ratio, that is, the ratio of dividends to earnings, is not really meaningful because the dividends has not been consistently paid, and their earnings has been negative at times, so you don't really have a reliable ratio you can quote. So here's the price chart, and what you can see is that there was a big fall off. The high price of around $16 was back around the beginning of the year, and it was a big drop off in late April from the high around the the $12 to $13 range, and it dropped down to plus $7 range. And I looked into find out what that was about, and essentially the company, after earnings was announced, and actually they exceeded earnings, but they announced that some of their orders were weaker than expected from some of their larger customers, and so people got spooked in the market, and they just dumped the shares. And from all we can tell, it was definitely an overreaction. And since May, early May, late April, early May, the stock has really kind of just been bouncing around from a little over $8 to maybe a little above $6 to where it is right now, around $7.87. Now, one of the reasons why we're so bullish on Namtai is that their numbers look exceedingly well. I mean, the revenues over the last 12 months, compared to the prior 12 months, has jumped 62%. So the revenues are up. Operating margins are up. It's greater than their 5-year average operating margins. That's a great thing. And the cash flow per share is all of the last 12 months is greater than the prior 12 months, as well as the free cash flow per share. So those are not very typical trends, and it's just symbolic of a lot of value being built up in the company. Now, the financial statement quality, I've listed it fair plus, and it's fair to good. I might have been a little harsh, but the company has no significant long-term debt whatsoever. I mean, it may have some small debt, but it's really negligible. The operating margin trend, I mean, the last 2 years it's been flat, but as I said, it's also been above the 5-year average. Price pattern trend, as you've seen, the last 5 months or so has been flat, but the company has been building up a lot of value, and they're building up cash and equity in the company. Now, while the overall market is bearish, we just see that so much value is being built up that there's just going to be a lot of pressure on this stock. I mean, just last month they've announced another large order from a company to manufacture some more products, and this with all these good things happening, we think that the model and Tim and I, we see that this stock can get up to $20. I mean, it could surpass the $16 high where it was, and it could get up to as high as $20, maybe even a little more. So that's a 12-month potential of 150%. As I mentioned, we don't see these type of opportunities all the time, but feel free to go online and take a closer look at Namtai Electronics. We think it's a great opportunity just sitting out there. As always, if you haven't signed up for our Saturday morning updates to our website and blog, please do so. You just go to www.gmcstockpicks.com. You can scroll down on the left-hand side to sign up, and you'll start to receive a nice little short email of what's new on the blog and website for the week. You can just take a quick look at it and see what interests you, and check out the stories there. These opportunities, as well as this one, are all driven by real-time analysis using our own self-developed proprietary algorithms. And we're new here on the block, and we want to show everyone just how good we are. So don't miss out. Sign up. You can always just unsubscribe with just one click. And here's another good stock for us that we think you should consider taking a close look at. And talk to you next week. Take care.